Starting, all attendees are in listen-only mode.
Good morning, Mortgage Coach users. My name is Lakeisha Grant. I am an account manager here in our success team over at Mortgage Coach. I have a little bit over 13 years experience in the mortgage industry. I've worn every hat you can possibly think of, from origination to processing, underwriting, even being a realtor at one point. Our goal as mortgage professionals is always to effectively communicate finance options to our borrowers and realtor partners. Well, with Mortgage Coach, you can definitely exceed that goal. Here at Mortgage Coach, we definitely believe in the trusted advice. We believe to be able to have that ultimate competitive advantage, being able to show your borrowers and realtor partners that you come in contact with that you are their trusted advisor. Being able to pride yourself with communicating your advice, maximizing your exposure, and allowing you to provide world-class service. We're going to talk about today the cost of waiting report. Cost of waiting report is being used to be able to create some urgency with the borrowers that you come in contact with, showing them how interest rates are changing, showing them how the market is fluctuating or how rates can go up and how they can go down, being able to show them and being able to put yourself in control by creating that urgency with them and showing them their finance options if they were to purchase now versus waiting. We're going to encourage everyone, if you're following along, to go ahead and log into Edge and build this report with us. If you have any questions through the call, go ahead and put them in the question box, and I'll be sure to answer them as we go along. And I'll make sure that I leave some time at the end for you to ask any questions that you might have. Also, I want to encourage you after the call, if you have questions, you can always email them over to us at support@mortgagecoach.com. Again, that's support@mortgagecoach.com. We're going to go ahead and jump right into our Edge system and start building out this total cost analysis for that cost of waiting. We've all come in contact with borrowers where they said, you know what, I know that I want to go with that conventional 5% down product. I just don't know necessarily if, in fact, I want to go ahead and purchase now or if I want to wait and see what the market does. So with this cost of waiting report, you can do just that by creating that urgency with your borrowers and showing them why now is a good time to buy. You can leverage Rate Watch and showing them ways how the interest rates have actually moved up and how the interest rates have moved down. I'm going to go ahead and open up a cost of waiting report that we've already built out. Just remember that when you're building any report, you have the option of building either that individual or marketing report. Do remember the difference between an individual and marketing. That individual gives you the first, middle, and last name option, where the marketing gives you a report headline. You will notice that there are some red and black fields throughout the building process. The red fields provide direction to Edge, and the black fields pretty much support that direction. So it's not always imperative that you fill out each and every black field. However, there will be times you need to fill them out to be able to support the direction you're moving in. And as you start to work with Edge a little bit more, you'll get an idea of when you need to fill those out and when you don't need to use those black fields. But for the purpose of this class, we're going to go ahead and just build the minimum amount of fields. I'm not going to go too much in detail because this is more so of an advanced class, and I understand a lot of you on the call may already know how to build. But we're just going to talk about some particulars and talk about some important parts of building out this total cost analysis. So when you are building out in that client screen, one of the most things that you're going to start out with completing is the borrower's name or that report headline. Notice that it is in red. So in order for your report to save, you will have to put something in the report headline or the first name field. We're going to jump right down to that friendly name field. This is the field that you use to be able to distinguish the difference between the reports that you're creating. So yes, you may have worked with, let's just say your client is Don. You may have worked with Don before. You've shown him his FHA versus conventional options. Now Don wants to know what his rate options would be if he was to buy now versus buying later. So on the friendly name, you could put cost of waiting to be able to distinguish the difference between the report that you've already created for Don, and you don't have to do the report all over again. So just make sure you guys are utilizing that friendly name field to distinguish the difference. I'm going to go ahead and advance forward to our Goals tab. On the Goals tab, notice that there's only one field in here that's related to a purchase. That's purchase a new home. All these other fields are related to refinance, and we did cover the refinance class last week. So if you do need a refresher on that, send us an email over at support@mortgagecoach.com. We'll make sure that we get you the link to that class. Also, you can also view our Mortgage Coach Support website, and you can view any of the previous classes, previous calls, coaching calls as well on the website on our YouTube channel. So I encourage you guys to view the Mortgage Coach Support site. So I'm going to go ahead and advance right forward to our Assumptions tab. On the Assumptions tab, I'm going to go ahead and put in that red field. That's the most important here, to put in the purchase price for this intended property. All the other fields, I'm going to leave them blank and still be able to create an effective report. Advance right forward to your affordability screen. This is where you can leverage the conversation. Maybe you want to get a better idea of what in fact your client can qualify for. Or maybe you've already done that, so you don't want to have to fill out this tab at all. That's completely fine. You can't skip this tab altogether because remember, it does provide supporting direction. But if you do want to get an idea of what your client's debt to income ratio is, you can do that by filling out this page. So let's just go ahead and put in our client's annual gross income. Let's just say it's $105,000 a year. You can ask your client about their credit status. Is it good, bad, or excellent? This is a good way to stay compliant without having to send out disclosures or run their credit yet. Get an idea of what their non-mortgage debt payment is on a monthly basis. So I'm going to go ahead and put in $550 a month. You can also get an idea of what his savings balance is at this particular time to get an idea if he does have enough money in his savings account to be able to purchase FHA versus conventional, or if in fact he can go 5% versus 10% down on a conventional product. So let's just say our client tells us that he has $60,000 in the bank. Maybe our client tells us that he has a regular savings account. He doesn't know his savings interest rate percentage. That's perfectly fine. You can put 0.2% standard rate, or you can leave it blank. Then you jump right down to your tax bracket percentage. This is where you can show your client some benefits of home ownership. Going ahead and showing him his tax benefits. Maybe you don't know the tax bracket percentage for your client. You can always click on that Find Tax Bracket button. It will link you over to a separate page where you'll be able to search based on the tax year, their filing status, and then their annual gross income to find their tax bracket percentage. So we see that their tax bracket percentage is 28%. We're going to go ahead and go back into Edge and put that 28% in, and then I'll show you on the final report where that tax bracket percentage will calculate. Now we've gathered information from our client. We've completed that client's goal assumption and that affordability tab. Now we want to move straight to showing our client what we can do for them by filling in the products. So I'm going to quickly go to that products tab. And as you notice, we've already built out that first product, which is that buy now. So this is where we're showing our client what the rate is to right now if they were to purchase versus waiting. So we would call this product a buy now. On a product name, you want to make sure that you're putting something very specific. Whatever you put in this product name field will show on your final report. So you want to put something that your client's going to understand. I like to use maybe the agency and the down payment. In this particular case, I'm telling my client this is what your payment would be if you were to buy right now. Remember that you have the option of using product templates if you have them built in. If you do not have any product or fee templates built in yet, we do have walkthrough videos available on our support website which will help you to build out those product and fee templates. But building in product and fee templates will help your building process of your total cost analysis to be a lot smoother and quicker. So I encourage you guys to view those videos to build out those product and fee templates. Then we're going to jump right down and put in our purchase price. We're going to put in our down payment percentage. It's automatically going to calculate our base loan amount for us. We put in our interest rate that we can offer our client, the term and months, and then our loan type, whether it's fixed or whether it's an ARM product. I'm going to advance right forward to our closing cost tab. And you do have the option of putting in your closing costs as a lump sum, but I do recommend that you click on that closing cost details button. Here, if you've built out fee templates, you can pull from the fee template button here, and you'll be able to pull down different fees and be able to itemize the fees that's associated with this particular product. You have the option of adding in an additional fee. You can delete any fees that don't apply anymore. You can make any adjustments to any of the fees, and you can even add custom fee like an earnest money deposit and so forth. But once you have all your fees in place, you would go ahead and click on that Apply to Loan button. Make sure you're putting in your prepaid interest. And notice that when you hover your mouse over your prepaid interest in days, it will show you what the prepaid interest amount is cumulative to in a dollar amount. I'm going to go ahead and advance right forward to our monthly cost screen. So on this monthly cost screen, this is where you're building in your HOA, your hazard, your property taxes, any other payments, and then your mortgage insurance, of course. On your hazard and property taxes, you do have the option of putting in that lump sum amount, or you can put in a percentage, which will automatically calculate into that dollar amount for you. Jump right down to your mortgage insurance, and you can put in your mortgage insurance factor. Also putting in your MI cutoff in months if this was an FHA loan. Then jump right down and put in your hazard reserves and your tax reserves. Then you can select the box to be able to collect that 12-month premium since this is a purchase. You also have the option down at the bottom to be able to add a second lien. If you were doing like an 80-10-10 or something of that nature, you have the option of adding in a second loan. Now, if this is a template that you'd like to save to use in the future, you can always click on that Save As Template. This will be saved in your settings as a product template. So this is also a good way for you to be able to save this particular template to use going forward. I'm going to go ahead and advance right forward to our next product, which is our Buy Later product. This is where we're going to start building that urgency with the client. We're going to go ahead and utilize that Copy From feature to pull over all the information that we put in on our Buy Now product so that it copies right over, and all we have to do is just make a minor adjustment to the interest rate. Maybe we've used Rate Watch and we've checked what rates did the last 3 months, or we've checked what the interest rates did over the last month or so. And we saw that interest rates moved up. So we want to show our client, if you were to wait another month, potentially interest rates can go up 1 point. So we changed the interest rate to 5.625%, leaving all the other information the same, and we'd advance right forward to our closing costs. Now, since we use that Copy From feature, it automatically brought over all the information. So if we need to make some changes, you can always go back into your closing cost details, make any changes as needed. Make sure you click that Apply to Loan button so that all your fees will carry over. We'll go ahead and advance right forward to our monthly cost screen. Notice that all the information again brought over because we utilize that Copy From feature. You can make changes here as well. Now remember, you do have the option of building up to 4 different products to compare to. So if you click on that Add Product button down at the bottom, it gives you the option of adding up to a 3rd or 4th product. So just remember, if you want to show more urgency to your borrower, show them maybe what interest rates would do or what prices would do if they were to buy the rate down, or if they would buy out MI, or even if they were waiting prices to increase because of more interested buyers, you can utilize that Add Product template to show a 3rd and 4th scenario. I'm going to go ahead and advance right forward to our Analysis Summary screen. And on this Analysis Summary screen, you have the option of changing out your property appreciation rate according to the market area. It's defaulted at 3%, but just remember you do have the option of changing it out. The short-term analysis can be changed in months. Your long-term analysis can be changed in years. And then on your purchase scenarios, your benchmarks is always going to show at the highest default, purchase or refinance, but on your purchase scenario, you want to leave it to show the highest default. That way you're showing the highest savings for each product compared to each other. So on this monthly savings, we're seeing that we have a $205 savings. Short-term savings, we have a $12,000 savings. And then in the long term, you have your radio buttons down at the bottom where you can select to show either the total net worth, the total principal paid, or the total interest in MI. So just remember, on this Analysis tab, this is where you're actually tailoring the report to show what's most important to your borrower. You can change out this report to show different terms in months or different terms in years to be able to show your client what's most important to them. You can also click on that Adjust Reinvestment Strategy tab. And in this top section here, you can show your borrower how they can reinvest back into the principal. In this middle section, show them how they can reinvest into a short-term savings account. On this bottom section, show them how they can reinvest into a long-term savings account. So the reinvestment strategies will be covered in other classes going forward, but just remember that you guys do have the option of being able to show that reinvestment strategies to your client. I encourage you to use this because this is a game changer. It will definitely separate you apart from everyone else. I'm going to go ahead and advance right forward to our contact screen. Now this is where you want to capture your borrower's contact information. Just remember that there is a notification feature built into the system. So whatever information you put in here, when you're notified that your report has been viewed, it's going to show on your alert notification so that you can quickly get back in contact with your borrower. So put some information here so you don't have to go and search for their phone number in your Rolodex, your iPads, or wherever you might keep phone numbers. Just go ahead and put it here. When you receive that alert, you can quickly get back in contact with your borrower. On this property address field, maybe your borrower don't have a property address for a property in mind yet. Maybe they haven't found a home yet. You can always put your future home or your dream home or TBD if you'd like. Whatever information you put in here will show on the final report. I'm going to go ahead and advance right forward to our first presentation screen, where you're going to select the type of presentation you're going to show to your client. So you have the option showing that total cost analysis, that seller buy-down, the amortization schedule, and even that Fannie Mae export. Down in the middle section here, you have the option of unchecking any particular product that you've built out and not showing it on the report. So just remember, you can't actually delete any products that you built out, but by unchecking any of the boxes, it will remove that particular product from your report and it will not show. In that payment notes section here, this is where you can show that taxes and insurance are included in your payment. This is a good compliance piece. This is where you'd be able to stay compliant. It will show on your report with a double asterisk. Now I'm going to go ahead and advance forward just to show you guys that these are the analysis summary screens recap pages, but this is the final presentation page where we're at now. Now we're going to select the type of presentation or how we'd like to send this presentation out to our client. You have the option of saving it as a PDF, printing it, but we do recommend that you email the link. Not only is it going to notify you when your report has been viewed, but also you're going to be able to quickly get in contact with your client by sending them out this link. You're going to put in the report date for today's date to remind yourself and your client when this report was created. Then you're going to go ahead and click on that Generate Link button. And then you're going to get that personalized link where you can copy and paste that link and send it off in a separate email to your client. Remember, before you send off any report, go ahead and add some audio video to your report by clicking on that Add Audio Video button. We have noticed that 7% more of our reports are viewed when they have audio video attached. It's a good way for you to be in front of your client when you're not there to be face-to-face with them. It's a good way for you to be able to explain your report and just reach out, introduce yourself if this is a new client or realtor partner that you're working with. So I encourage you again to use that Add Audio Video and attach some narration with your report. I'm going to go ahead and click on the Edge Live to pull open the report that we just built. And now we're going to start talking about the report. So go ahead and put some questions in the chat box. This is your time to ask any questions as I explain the report. I noticed that we do have a question that came into the chat box. So I'm going to go ahead and address that question before we start explaining out the report. The question says, does the collect 12-month premium add to the total closing costs over and above what you already inputted? So I'm going to go back into Edge and show everyone exactly what that question is talking about. So that question is talking about in our Products tab on our monthly cost screen where it says collect 12-month premium here. When you select that 12-month premium box, yes, it does add in an additional 12-month premium in addition to the 2 months reserves that you've already collected. So if you go onto your closing cost details, on your closing cost tab, you'll notice that you have your 12-month premium here, and you also have your hazard reserves. These two fields will be grayed out in addition to your tax reserve field will be grayed out as well. The reason that these fields are grayed out is because these fields weren't added directly from your closing costs. They were added on your monthly cost tab. So if you were to delete any of these fees from here, they will automatically delete from your monthly cost tab. If you were to make any adjustments on your monthly cost, the fees will automatically adjust into your closing cost tab as well. So I hope that does answer your question, Tim, but yes, if you go ahead and collect that 12-month premium, it does add to the total closing cost. So I'm going to go back to the report. Keep those questions coming, guys. We're going to talk about this report. As you all notice that the report is broken down into 4 different quadrants. That first quadrant is our summary section. This is where we have all the information that we normally talk about with our clients. We have that loan amount information, the interest rate, the APRs, the term, the payment, the tax benefits that we built in, that cash to close, monthly savings, that savings over 60 months, and then their freedom point. You also have a payment stream section in here. This is a good way for you to be able to see when that MI cut off and how the payment declines. You also have your payment notes that you built in to show where taxes and insurance are included in that monthly payment. By clicking on that More Info button, your client is able to see their payment breakdown, to see P&I payment, property taxes, hazard insurance, mortgage insurance, that HOA payment for that total PITI payment. They also are able to see any investment payments that you may have built in. The closing costs tab shows them their down payment, their loan to value, the APR costs, the non-APR costs, points, upfront MI, prepaids, contributions for their total cash to close. But if your client would like to see an itemized list of their closing costs, they can always click on that Fee Details button. And here they'd see who's paying for what of their closing costs, which of their closing costs is considered APR, which of their closing costs is prepaid escrow, which is financed into the loan. On that reinvestment strategy, this is where you would have built in and shown your client how they can reinvest back into the principal. Reinvest into a short-term savings account or into a long-term savings account. And then let's move right over to our monthly savings section. This is our immediate impact. Here is where you're showing that graph, showing your client on a monthly basis. If you buy now, you're going to have a $205 savings versus waiting, you're going to have no savings at all. Your payment is actually going to go up. And that More Info button, your client is able to see that loan amount, the interest rate, APR term again, and their total monthly payment to be able to show them how that payment was calculated. They're able to see their tax bracket benefits. Their tax bracket percentage to see their tax benefit. They're even able to see that property appreciation rate. Then we'll jump right down to our savings over 60 months. This is our orange graph area here. Here you're showing your client that they have a net savings of $12,007 by buying now. Now when you explain this section to your client by clicking on that More Info button, this is where you can show your client that this savings section over 60 months is showing them the savings for the money that they're not going to recover, the interest and the MI for each individual product, subtracting out any tax benefits, and then adding in their closing costs is giving them a total cost for each individual product and then showing them which one of those products has the highest net savings. So again, the savings over 60 months area is the net savings on the amount of money your client is not going to recover. When we say that, that's the interest in the MI and the closing costs, money that they're not getting back for each individual product. You're showing them which one of those products has the highest net savings. When we jump right over to our interest in MI section here, this is our long-term section. Again, remember you had the option of showing them either the interest in MI, you could have shown them the total principal paid, or their total net worth over that yearly period that you've built out. So here we're showing our client that if they were to buy later, they would be paying more in interest in MI. So it's to their advantage that they go ahead and buy now and pay less in interest in MI. By clicking on that More Info button, you can show your client their home value based off of that yearly period and that property appreciation rate that you've built in. How much equity, what their loan balance would be, how much principal they've paid, how much total PITI paid, and then also how much tax benefits they had over that yearly period to again show them their total interest in MI payment. Remember that the report is live and interactive, so you can go ahead and make any of these highlights on your end from your desktop version, and your client will be able to see them instantly on their end, no matter if they're viewing your report from their mobile device, their tablets, or even from their desktop. Your client does have the option of being able to see exactly what you're showing to them without even having to move a finger. They'll just be able to be navigated by you going ahead and navigating the report on your end. They'll be able to see exactly what it is that you're showing to them. Your client still has the option of saving the report, printing the report, and they too can even click on that share button and share that link. If they'd like to share the link with family or friends, they can text the link, email the link, or they can even post this link on the social media site to show exactly how you become their trusted advisor and to be able to show other potential borrowers and generate leads for yourself. So again, this is a way for you to maximize your exposure Deliver that world-class service to your borrowers and show them, yes, I am your trusted advisor, and this is why you should purchase right now instead of waiting. So I want to thank you guys for joining today's class this morning. We do have another class this afternoon where we'll be talking about some more tools and strategies that you can use with Mortgage Coach to incorporate into your everyday way of doing business to build that success. Just remember, guys, that we are here to build that success with you. So if you want to send over some reports and have us provide you some feedback, always send them over to us at support@mortgagecoach.com. We'll be sure to review each and every report that you have and provide feedback. If you have any questions, send them over to us again at support@mortgagecoach.com. We're definitely here to help you. Thank you guys for joining this morning's call. We'll see you this afternoon, and have a great week, everyone.